If you want to become a master at trailing price action with your entries, then you need to watch this video. I'm going to teach you the shelf method. This is used by a lot of professional traders. And I'm going to use this example from today's live trade. Once I'm in the trade, I'm going to hop down to a lower time frame, say like a 1 minute. And the first thing we want to do is define a shelf. A shelf is the area between the last pivot high or pivot low or consolidation zone from the candle body to the candle wick. So once we enter a trade, we're looking for a new shelf to form above us. Let me play out a couple candles. In this example, price ranges for quite a bit and then decides to finally give us a shelf over here. We want to see a clear swing point broken with a little bit of volume, in this case, leaving behind a fair value gap. And we can actually include this fair value gap. The shelf is from the highest point of the candle body to the wick. And if there's a fair value gap, then we include it. So this would be the shelf. What I want to see when I'm trailing is price action retest the shelf and then move back up into the consolidation range, possibly range for a minute, but eventually break that range, creating a new shelf underneath. Once price action retests the shelf and then moves higher, we can take our trail stop and put it inside of the shelf. You see, we're playing the odds that price really shouldn't retest the shelf because it's a healthy trend to the upside in this case. If it were to close a candle body beyond the shelf like this, then most likely the trend is going to reverse. And a lot of times you won't have a fair value gap here to show you an inversion. For this trade, we remain patient, wait for that price to retest the shelf just like it did there. Now I'm clear to put my trailing stop inside of the shelf. Let's play out a few more candles and see what price does. So this is an example of price retesting a shelf with my stop loss in it and me just basically making a little bit of profit on this trade. Now, what would happen, let's say, if you were in the trade up here? Let's say I entered in right about here. Price action moves up, creates a consolidation range right here. This swing point was broken with a little bit of volume. So we take the wick and the candle body, include the fair value gap, and that is your shelf. We're now clear to put our break-even stop in the consolidation range below the shelf. In a perfect scenario, price should retest the shelf, move higher. Here you can see price retest the shelf. At that point, I'm good to trail price tighter, move my TP higher. Price has another quick consolidation range with the volume break, creating another shelf. Here you can see the retest from price action. So we're now good to trail inside of the last shelf that was tested. Here's another consolidation range with the volume break to the highs. We're including the shelf, looking for price to retest the shelf and then move higher. Here price breaks higher, creating another shelf right here. I'm now good to trail inside of this shelf. Now, if I were you, I'd be super curious to see, is the trend over? Yeah, I wouldn't want to be messing with any of this drawdown. And the best part is, if you want to learn the strategy where I've only had 6 red days in 2025, then just comment the word orb and I'll send you a link to the roadmap where I cover this from A to Z absolutely for free.